And Bitcoin's going up 200% a year for a decade, but it went up 800% last year. And if you understand Bitcoin, you think, well, it's $1 trillion asset, probably going to 100 trillion. So if I get in now and I convert my cash, which is depreciating, into something that's appreciating, Bitcoin's the most secure database, secure network in the world. And in the first 1, 2, 3, 4 years, you couldn't be sure, but after 12 years, it has not been hacked. Well, the whole idea is Bitcoin is a savings account, it's a bank in cyberspace offering a simple, secure savings account. And that savings account has been yielding 200% tax-free interest for a decade, and this year it's doing more. So it's a good way to save money. The board was excited about it. If I have 200,000 in cash and I convert it to Bitcoin, if it goes up 20, 30, 40% a year, I mean, if it went up 1/10 of what it's been going up, it's still a million times better than my alternative of sitting in a bank savings account. Our employees are very enthusiastic about this. The next step for us is to roll out Bitcoin on-ramps and Bitcoin savings options for all of our employees. I think you're going to see an explosion of that. You know, everyone offering 401k savings plans and employee savings account. It's like the employee stock program for the decade. If I wanted to diversify, yeah, I can put my money into the company stock, but maybe I would like to put my money into a thermodynamically sound money that's going to be appreciating. It's just a good retirement idea. And so it's a big opportunity, right? I think you're going to see an explosion in those finance products from insurance companies and fund companies and the like over the next 12 months. If you'd asked any company in February of 2020, do you have a Bitcoin strategy? They would be like, what's Bitcoin? Why do I need it? What's the problem with my traditional treasury strategy? But I think if you look at what happened following that, all the treasury strategies just were broken. If you're buying low yielding bonds, you're getting 0% interest. The money supply is expanding. It expanded 30% last I checked, but certainly 20%. So your purchasing power is falling by 20%. So that breaks people out of their traditional patterns. So the idea behind Bitcoin, and if you reason from first principles, and Elon Musk does reason from first principles, he created PayPal, and he created a rocket company nobody thought you could create, and he created a car nobody thought you could create. Well, then you look and you say, well, look, I got $20-30 billion and it's losing 15 to 20% of its purchasing power a year. What should I do about that? You know, the answer is pretty clear. Buy an appreciating asset. MicroStrategy went through the process of considering everything, and we finally decided Bitcoin was the strongest treasury asset that we could find. If you have $100 billion worth of cash or $10 billion worth of cash, it's yielding 0, losing 20% of its value a year. It's a liability. Flip it to an asset. The way you flip it to an asset is you convert it into something which is going up 200% a year. And Bitcoin's going up 200% a year for a decade, but it went up 800% last year. And if you understand Bitcoin, you think, well, it's $1 trillion asset, probably going to 100 trillion. So if I get in now and I convert my cash, which is depreciating, into something that's appreciating, you create a very positive cycle for your shareholders. And that's what I conveyed in the tweet. I mean, that's what he was doing. My only disagreement with him is I told him to buy 10 billion and then, 5 billion. If you look at what happened, if Tesla or Apple stepped up and bought 10 billion worth of Bitcoin, they would triple it, double or triple it. Yeah. You would, people noted Tesla made more money in 6 weeks following that decision than they made in the history of making cars. I think that the right way to think about this is that money has two components. There's a currency component, which is a medium of exchange and a payment network. And then there's an asset component, which is a long-term store of value. And it used to be people used the dollar as a medium of exchange, and they used debt and ETFs and index funds as store of value. Mm-hmm. And maybe some people use gold. I think that if you look out, you're going to see the final culmination of the mobile wave is 8 billion people on the planet with a mobile wallet, and one layer is US dollar or euros in your checking account or your payment network, and it moves at the speed of light on compliant payment rails. And then the second layer is your savings account, and that's like a high quality asset. So what are the high quality currencies? US dollar, euro, yen, yuan. What are the high quality assets? Bitcoin, and then fill in your blank, an ETF, your Amazon, Apple. Who are the losers? Low quality assets, probably gold is a loser. Some of the, crappy stocks are a loser. Bonds that are negative yielding, savings accounts that give you negative interest. Those are losing assets. And the losing currencies, Venezuelan currency, Nigerian currency, Argentine currency, Lebanese currency. The weak currency is being squeezed out. Weak assets get squeezed out. The world will stampede toward strong assets, strong currency. I think the US dollar is a winner. I don't think it's a loser. I think that this spreads American supremacy to you should expect 5 billion mobile wallets with the US dollar on it. And now how do you get the mobile wallets to synchronize in cyberspace? You need the Bitcoin blockchain, because that's the settlement network that lets a mobile app in Africa settle with a mobile app in the US and a mobile app in China once a day on the blockchain. And then you got 18 million applications or 18 million transactions an hour running on the second layer with the currency. Bitcoin's the most secure database, secure network in the world. And in the first 1, 2, 3, 4 years, you couldn't be sure, but after 12 years, it has not been hacked. The risk, the cybersecurity risk, is at the layer 2 level with Bitcoin banks.
Yep.
Square is a Bitcoin bank. Coinbase is a Bitcoin bank. Mt. Gox was a Bitcoin bank. So there'll be 100,000 of these mobile apps and websites sitting on top of the underlying Bitcoin. They all have their own attack surfaces, and they range from simple password on a web browser down to like triple factor authentication hardware wallets. And you'll see all of those things. I think if you're a user of Bitcoin, you have to just very carefully decide what kind of Bitcoin bank do you want to deal with. And look, you could buy Grayscale Trust, GBTC, and you own some Bitcoin exposure, and you don't really have the hacking concern. What you've got is Fidelity competing with Coinbase, competing with Square, competing with Trezor, competing with Ledger, competing with memorize the stuff in your head.
And finance.
And that's the market, and that's all fair, and it's fine. Yeah. And the market will decide. And by the way, it's not even that there's one right answer, because if you're Mass Mutual and you want to buy $1 billion of Bitcoin, you're not putting it on a Trezor or whatever.
No.
You don't have the ability. So everybody, there are flavors of money, and everybody's going to take a different approach to put their money into this asset space.